The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 23rd edition of today's Trader's Edge show. Of course, it's a terrific Thursday edition. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone and dial on it at 877-927-6648. Now, if you can't dial in, but you've got a question, go ahead and send me an email. For that, send that out to steve@tfnn.com. And inside that subject heading, if you would be kind enough to put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. A slightly mixed bag out there. That mix coming from the Dow and the NASDAQ, composite, both down just slightly. 24 points for the Dow and 2 points for the NASDAQ composite. The NDX 100 is trading up about 0.1% or 15 points. The S&P about 4 points. The same for the Russell. Semi's big mover there, up nearly 2%. That's a move of 56 points as we speak. Gold's off $13. Silver down 31 cents. Light sweet crude off $1.56. Natural gas down up 8 pennies. And the 30-year Treasury is up 6 ticks, printed out at 124.24. So let's do this here. Let's take a look at the NQ and the ES Mini in detail. For that, we're going to go ahead and change panels. So give me a moment. We'll get over to our white background screens out there. Change windows. Movement here. There we go. So in the upper left-hand corner, now here we've got just the daily time frame, so no weekly or monthly, and then all of the different intraday. We can see we've had a nice big swoosh, Nike swoosh to the downside. The 30-minute now, as far as what identified that top out there, if I could find anything, the only thing I have is a 10-minute Rhodes Momentum Indicator top that formed out there, so nothing else. Now on that 10-minute basis, by the way, we are forming bar number 8 as we speak of a TD9 count. That suggests that we should see a short-term bottom. It's 11:10, between 11, well, really between now, let's say 11:10 and 11:30. So we'll be back. We'll be able to take a look at that 10-minute chart for the NQ, after the 11:30 hour out there. So that's all I see. Now, what we do know about the NQ is price has got a pretty decent level of support, and that's between the range of 11,975 and the center of its profile, which is at 12,083. We're at 12,093 as we speak right now. So that's the level of support that price would have to bust through. If it does bust through that, and what I specifically mean is a close below 11,975, then that would trigger a move inside the NQ down to the 11,365 level. If we take a look at a 5-hour time frame chart, absolutely forms a nice TD9 count bottom out here. It completes that pattern at 2 p.m. yesterday. We took a look at that. It looked like a lot of promise out here because we did have 3 consecutive closes above the top of its profile. But as you can see, price right now trading back inside its profile. Wouldn't surprise me for price to test the 12,066 level. But nothing has been broken here. It still has a active TD9 count bottom that is in play. The only way that gets negated is a close below 12,034. And that's a number I'd write down on my pad of paper, because if we do get a close below that, this market is definitely headed lower. An 11,975 would be a likely price target for the NQ. 2-hour or 4-hour time frame chart, also with a Rhodes Momentum Indicator bottom. This TD9 count that's in place here, that's going to go away. The same thing with the 5-hour time frame. or should go away most likely. The 2-hour time frame chart also erodes momentum indicator bottom out here. Price not breaking through any levels of support. The levels of support that are being broken, though, are coming from the 60-minute. The 30-minute so far is held up at its breakout level of support. That's at the 12,093 level. So, Steve-O, take it home from here. Well, if I take it home from here, I'll just simply come over to this chart. We know that we had 3 consecutive down days. Yesterday was a bit of a rally out there. At least it wasn't a further low. I would imagine that we have a close above yesterday's close inside the NQ. And that close yesterday was at 12,097.50, at least setting up day number 2 of a counter trend move. Where we go after that, well, we'll have to take a look at the charts to try to figure that out. We won't be able to do that until this evening or tomorrow morning. By the way, tomorrow morning I'll record the show between 8 and 9, so please join me for tea and crumpets if you would. Now, that's the NQ out there. Let's not finish just there. Let's come back and take a look at market breadth so we can give you the play-by-play. Now, this is the market breadth here for the S&P. Let me change this over. This is for a 30-minute time frame. Now, we saw in the 30-minute time frame prices pull back and tested that breakout level of support. We can also see that right now there's only 3 instruments on a 30-minute basis trading above profile, 71 below. So the buyers have definitely got their work cut out for them. If they can, and you can see they're defending 12,093 on that 30-minute time frame chart. But if that falls, well, wouldn't be a surprise to us. And that could just simply be setting up a test of yesterday's lows out there. If we look at the other time frames, the other 4 time frames for the NQ out here, what we will see when we can get there is the NASDAQ is now, so it's bearish. It has a bearish crossover. More instruments trading below profile than above profile. For its daily, for its 240 time frame. The 60-minute is bullish out here. So from that standpoint, we took a look at the 30-minute, which was very bearish, but the 60-minute, well, you've got 47% of the instruments trading above profile, 22 trading below profile out there. So here, what does that say to you? Does that sound like a choppy market? Sounds like a choppy market to me. So those are the conditions out there. Wouldn't expect it to be any different. Now let's go take a look at the ES Mini, see what it is doing. The ES Mini, more difficult to really call out there because from a daily perspective, price is below profile levels. So therefore, where our eyes should really be focused is on that NQ chart. Because if NQ busts through those profile levels, well, certainly the ES Mini is going to follow along, or more likely than not, the ES Mini will follow along. So as you take a look at this daily time frame, that's in the upper left-hand panel. There's no bottoming pattern or signal there. There is on the 5-hour chart, Rhodes momentum indicator top. Well, what prices struggle with, and this is the number right down at your pad of paper, is really the 40.25 level. If price can close above 40.25 for 2 consecutive bars on a 4-hour and a 5-hour chart out there, well, then that's going to tell us that we should have a further rally, and that further rally at least lasting through tomorrow. Why do you say that, Steve-O? Well, if we take a look at the ES Mini, again, just like we did in the NQ, days consecutive to the downside, we've now got 4 consecutive days to the downside. On the bottom here, I've pointed out other 4-day moves out there. Each have been met with some type of at least counter trend rally. They typically last 2 bars out there. So that's why, and let's watch the NQ, that's not a guarantee, but we do have patterns. You and I, we spend our time on this show looking at patterns out there. This is most certainly one of them. What we should see out here is at least a 2-day rally inside the NQ. Steve Rhodes with TFNN. Give us a call at 877-927-6648 or send me an email, steve@tfnn.com. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. A slightly mixed bag out there with the Dow being down 50 points. The S&P is flat. NASDAQ has now gone down 2 points. Russell's up 3. Semi's up 52. Still 1.8% to the upside. Let's go take a look at some of the requests that have come in so far. The first one coming in from Hector and Patty. And Hector's asking about an A to B equals CD down pattern inside of a Chevron out here. And so let's go take a look at it. So from an A to B equals CD standpoint, from the daily time frame, the A point very easy to identify. That's going to be the high from January 26th. Then we take a look and watch how far this moves lower. When it moves lower, that becomes our B point, the low of the pattern so far. That was on February of the A to B leg, I should say. And that took place on the low of February 2nd. We then had a 3-day rally. It was about a 0.382 retracement. It was actually 36.06 to be exact. That's close enough for me to set up the B to C leg. And now what we have is the B point. That was that 166.82 low from February 2nd. That low, by the way, generated volume of 10 million shares. When it was passed, price gap down, but only 9.6 million shares. So a similar type volume. Does it matter? No, doesn't matter. Has it completed the A to B equals CD? No, it has not, because its price projection is 153.40. Now, the danger here for Chevron, there's really 2 dangers, I suppose. One is that we have a new daily profile that is forming as we speak right now, Hector and Patty, and that profile is above price. And that itself is a bearish message. That doesn't mean that price can't try to make its way up there and test resistance at 166.21, but it is a bearish message out there. And therefore, more likely than not, what ExxonMobil is going to do is at least complete the 1-to-1 level. Now, we can see along the C to D side, price on the right side versus the left side. If we're on the left side, I would be saying to Hector and Patty, hey, look, this is a candidate to do well more than a 1-to-1, A to B equals CD to the downside. By the way, the 1 to 1.272 level price projection area, 147.69. Now, the 1-to-1 is 153. 156.28 is the center of its bullish structured weekly profile. So the real support zone out here, Hector and Patty, is between 151.01 and 156.28. See if we get a daily buy the D point pattern as price is getting down there. Then that could be your buy signal out here. But we are paying attention to that new profile that is attempting to form inside of ExxonMobil. Now, that's the black background charts out there. Let's go move over and take a look at the white background chart, see if there's any additional information that Hector and Patty need to be aware of. And that would be you too out there. And as we take a look at these charts, over on the left-hand side, the daily, no other bottom pattern or signal out there. The weekly chart not providing us with any additional information. And now with the monthly, now below its green oscillator and change line, it tells us that it has lost its momentum. So it's lost its momentum. We should see this go ahead and at least complete that one-to-one move down to the 153.40 level. I hope that helps you out. And thanks so much for your request. Let's go to our first caller. It's John in Philly. John, thanks for calling. Thanks for holding. How are you today?
I'm doing very well. We got a bunch of snow in the upper Midwest the past 2 days, so it's pretty cool.
Lucky you. That's all I have to say about snow.
You're saying that so enthusiastically. Yes. Let's move on, Steve, to my question about the 30-year bond futures market.
Absolutely.
Steve, back on February 2nd, the bond futures topped, a little double top up there, and it's been a 15 trading day relentless and orderly decline into a low this morning in reaction to some econ data. There was a bit of a bounce. My question, sir, is as you look at your tools and techniques, is there anything that your work suggests that this 15 trading day decline is about to complete and do something other than go down?
Sure. So to answer that question, John, the only level of support that I have right now is coming from the weekly time frame chart. So I'm going to open up the weekly time frame chart. Now, this is the continuous contract. I don't think this is going to allow me to put the March contract up there. But what we can see here is that price is holding that red oscillator and change line. So in essence, price broke through the bottom of its bullish structured profile on a weekly basis and then made its way down to its next level of support. As long as price holds that level, that is a support area. And the reason I say that it's only the weekly time frame, because as I expand out the daily time frame chart here, the thing that should concern us is that its TD9 count bottom pattern that formed out here on February 17th was immediately negated the very next trading session. That typically means we still have a strong momentum move to the downside. The next price target to the downside would be 119.25. So I think you had to watch that weekly oscillator and change line. Now, I'm not saying that price can't bounce up to the 126 and change area out there, the current daily red oscillator and change line. And that type of a move, at least a counter trend move, can most certainly be supported as we take a look at some of the other time frame charts. For example, we'll start with a 5-hour time frame chart. On a 5-hour basis, as price got back to those prior lows, what we have right now is we have a Rhodes Momentum Indicator bottom that looks like it will form. The problem is it's 11:30, 11:23. This candle does not complete until 2 p.m. But right now we've got price trading above the top of its profile. If it can move above, or I should say close above, continue to trade above 124.30, that, and we're 124.29 right now, that would be an indication to me that it's getting ready to make its move to the 125.26 level. That's on the 5-hour chart. Before I go on to anything else, because we covered the daily and the weekly and a 5-hour chart, any questions about those or any comments that you'd like to share with the folks?
No, in fact, those 3 time frames answers my question. Anything short term, I'm not interested right at the present time.
Got it. Okay.
I thank you, and we're good to go.
Perfect. Hey, John, thanks so much for calling, and enjoy those 4 inches of snow up there. I hate cold weather. Other than it is beautiful, you have to admit. It is, after a fresh dusting of snow and the snow just hanging on the trees and everything, it's a beautiful thing for sure. But, hey, John, again, thanks so much for calling, and I'll look forward to speaking with you again soon, I hope. That was John in Philly. Hey, by the way, one thing I didn't mention here, and I didn't mention it because it didn't show up on the white background charts. I'll switch over here because it is pertinent, it is important for anybody who is trading the bonds, is there is a new profile that is attempting to form out here. And I'm going to come back and we're going to take a look at this just off of my main screen. So that's something that the white background charts have not picked that up. And the reason it hasn't picked it up is because we're using Stevie's advanced Doppler tool. So this helps us to identify potential profiles that are forming in advance of when they actually form. I don't know if that made any sense or not, but it does help us to know right now where buyers and sellers are located inside the 30-year from a daily standpoint. And where they're located is at 124.10. Those are the buyers. There's both buyers and sellers at 125.10, and then there's nothing but sellers hanging out at 126.10 out there. So that's the full review of the 30-year Treasury. I hope that helps everybody out. Let's go on to our next. Well, you know what I'd like to do here is I'm going to close that down. I'm on the white back. Oh, I'm not. I'm going to change charts here. Let's go back to those white background charts. And what I want to do is I'm going to, we only have about 40 seconds. What we'll do is I'll get that set up. When we get back from this breakout here, what we're going to do is we're going to take a look at Goldilocks. So we'll do that. I'll go ahead and put those charts up on the screen for the moment. I'll try to leave those up during the breakout here so that those of you inside the Tiger's Den can see what it is that we're looking at. And what you're really focused on, at least right now, is the daily time frame chart. And what is it that you see out there when it comes to gold? Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow down 91 points, S&P's off 5, NASDAQ 100 down 11. Russell is flat. Semi still up 50 points. Trendy's up 93 points as well. We're taking a look at the charts here for gold, and really what I wanted to help identify for you is a TD9 count bottom pattern that is going to form today and will complete tomorrow. Now, this pattern here, you look at the daily time frame chart. I'll just simply expand it out. What you're looking at is prices pulled back to its breakout level. Second breakout level, it is 1827, even Steven out there. So odds favor that we're going to see a bottom in gold form today or tomorrow. Now, the last TD9 count bottom that formed out here, just so you know how well these TD9 counts are working for Goldilocks, well, You've got one that formed on the bar following bar number 9. That was on October 21st, and that led to a bit of a rally, choppiness inside the profile. Price comes back, tests and rejects that bottom, and then simply takes off to the upside. Prior to that, we had another TD9 count bottom. That also held and led to a rally back on September 26th out there, and that was on the bar following bar number 9. So it's either today or tomorrow that we should see at least a bounce or bottom inside of gold. Now, we can see the oscillator and change line has changed colors out there. It has gone from what I'm using here as green to red. That indicates that after this bottom here completes today or tomorrow, we should see a move up to it. And it is 1869 right now. That number will change. And if price can close above that, the next resistance level will be at 1883.50 out there. So that's really what's going on inside of Goldilocks, and I wanted to be able to share that with you. Let's go to our next caller. It is Roger in Denver. Roger, thanks for calling. Thanks for holding. How are you?
Thank you so much. Thank you for my call.
Absolutely.
I really appreciate your help on guiding us throughout these days.
Well, thank you. I appreciate that. How can I help guide you through NVIDIA? Tell me what you're doing and how I can best help.
Great. I was looking at the Fibonacci retracement value, and looks like today it hit exact to a penny, 238. The high of the day was the 38.1% Fibonacci number. And if you look at the January 3rd and low to the February and then back to February 22nd, I'm looking at what do you see? Would it go to 38 or could it be extended to 61.8, which is to 60?
So
your thoughts on this?
Sure. So the very first thing, Roger, I need to do is qualify. You're looking at a Fibonacci retracement from a high to a low. Is that correct?
From low to the high, from January 3rd low to February 14th, and then high, and then back to February 22nd.
So, I mean, what I show NVIDIA trading higher. I don't see a retracement there the retracement that you're looking at. So I've got NVIDIA trading out at 233.49. And here's the time period that you're looking at. Now, I've just gone to the weekly chart versus the daily right here. But you're really referring to this time period where we've got a bottom that, in essence, formed right around February 26th. But, it's trading above last week's high. This is continuing to move higher out here, NVIDIA. No retracement. But I think I must be missing something that you're trying to tell me. So if we can go over that one more time, you're looking at a retrace. So your question is specifically.
Right. I looked at the bottom on. I selected January 3rd.
Yeah.
To the peak of February 14th.
January 3rd. Okay.
Right. And then the retracement back to February 22nd. And then it would predict what is the 38.1% would become 238.88, which is the exact high of today.
Wow, I apologize. And it's your first call to me. And can I just do this here? Can I share with you what I see in NVIDIA and where it's likely headed to? Is that okay?
Perfect.
Okay. So let's do that here. And so here's what I see when I take a look at the NVIDIA charts. Now I'm going to first there's A to B equals CD pattern, and I'm going to do this on the I'll do this on the daily time frame chart since you were using that. So first, with regard to a swing point though that you would use for, let's say, off of the bottom for retracements back, I would select December 28th low, not the low that you were using for January 3rd. You want to just take a look at the chart pattern. I think I've got it up on. Let me move over to the black background charts. I apologize. I'm going to move over to these black background charts out here. And so the low of this move, when we take a look at the daily time frame, from your retracement standpoint, should be the low that's out here. And that really formed on December 28th down at the 138.84 level. So just kind of nitpicking, so to speak, but that would be the low that I would use if we were looking at a retracement. Now, in this stage here, price is now above the swing point that formed on February 14th. Now, there were 67 million shares that traded that day. NVIDIA's already traded 65 million shares. Now, this is going to be a very large A to B equals CD, but I'm going to go back and take a look at the weekly one because I think we'll have a better perspective. But even here on a daily chart, what price did was it pulled back and it tested support, which was the bottom of the profile. Are you able to see us on Tiger TV? Or by any chance are you in the den?
I'm seeing.
Okay.
I'm looking at it.
Oh, perfect. So the A to B leg, that's easy for us to draw. And we'll take a look at the C point out here. Now, this was only a 28% retracement. I typically like to see a 0.382. But in this case here, I would cut it some slack. And the reason is because price pulled back and tested its bullish structured profile and held. So the one-to-one price projection here to the upside is 295. Now, that's on the daily time frame. What I'm going to do is switch over to the weekly because here we're going to use different swing points. And so there's an A to B equals CD pattern that is already underway. That A point being the October 2022 low, the B point being the December 12th, 2022 high, and the C point a retracement down in December 26th, the week of December 26th. Now you can see we're at the 1 to 1.272 A to B equals CD to the upside. Until a bearish reversal candle forms for the weekly time frame, Roger, what price should do is make its way up to the 267 level. Now, from a retracement standpoint, because you were using retracement, so let's go use that tool. If I go from the high, which is the week of November 22nd, 2021, down to the low that we use for the A point of that A to B equals CD, what we're going to see is up at 255.42 as a 0.618 retracement. So if I try to incorporate your use of retracements here, and knowing that the daily has given us a confirmation of moving higher by taking out a swing point with volume with only 2 hours to go, then what price should at least do is make its way to that 255.42 level. Now, maybe not right to the penny, but it should make its way up there. Now, if it makes its way up there, or maybe even higher, that 267, and then you get a bearish reversal candle, then that would be a Gartley sell pattern. That's all that I really see out here in the charts, and it looks to me like NVIDIA wants to continue to move higher. Now, are you long NVIDIA?
Correct.
You are. Stay with that position. Yes. Were you thinking of doing anything else other than staying with the position?
No, actually, I was thinking when to get out and basically re-enter at the lower price.
So based on today's move, look, you've got to do what's comfortable for you. There is nothing, as Tom will tell you, there's nothing wrong with going to the beach and taking that ball and coming home with it. And that's like going ahead and cashing out. There's nothing wrong with taking profits, even though the charts here suggest that NVIDIA should continue to move higher out there and we don't have any kind of topping signals. Anything can happen, as you know. So if it's me, I'm staying with the trade out here, especially based on today's activity. But you've got to do what's right for you. And Roger, I do hope you'll call back, and my apology for kind of botching up the first portion of the retracement discussion.
No, thank you so much. I appreciated your help.
You bet. You have a great day. That's Roger in Denver, Colorado. When we get back from this break, we're going to go take a look at natural gas for Thomas.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Only the semis and transports trading to the upside. Otherwise, all the other indices trading to the downside. The XLK and the XLE are also, and the XLRE, the real estate, are also trading to the upside. So we've got a mixed bag out there. But let's go take a look at that natural gas contract out here. And to do that, we're going to begin by taking a look at this chart. What you're going to notice here is that yesterday's low, which was down at the price point of 2.113, what that did was that hit the 1 to 2 A to B equals CD point out there. Did that yesterday. Now, if you own the art of timing the trade out there, I don't know what page it's on, but one of those pages will tell you that once you do a 1 to 2 A to B equals CD pattern, Thomas, that you are likely going to get a change in trend. Well, it turns out that yesterday was what we refer to as a key reversal bar. Now, a key reversal bar requires three very specific things. Number one, the market must be in extended condition. When we take a look at natural gas, that A to B equals C to the downside, that most definitely qualifies. Number two, the prior bar's low must be taken out, traded below, and the prior bar's high must also be taken out, at least traded above. Not close above or close below, just traded above. Well, that took place yesterday. And then the final and the third is that price must close in the opposite direction of the trend. Well, it most certainly did that yesterday. So we did get, or natural gas did provide a bullish signal yesterday. What has stopped me from getting back into that position is the strength of the TAS market profiles. What you and I know is typically the bottom of a profile is support. Well, sometimes support can become resistance. When you trade below support, price is trading below support right now. The bottom of that daily profile, and the bottom of that daily profile is $2.40 out there. So I know you asked about Boyle, but we're going to look at it because Boyle is a double or a triple. It's not going to provide you with the same accurate information. We really want to understand what's going on inside the underlying instrument. I will put Boyle up on the screen for you, but if we're going to look at natural gas, we really need to take a look at the contract that makes up the majority of the of Boyle or of UNG. And that is, I think we took a look at it yesterday. I don't have the updated data as of last night, but it was about 80% was in the April contract, and that's what we're looking at right now. So the real key level. So look, an aggressive trader would take a long position. A conservative trader would wait for some additional information and wait to at least see if price can close above that $2.40, to be exact, 2.407. So that's what we've got when we take a look at the daily charts here for natural gas. So I'm going to flip back over to the white background charts. What we're going to take a look at there is additional natural gas charts just to see if there's anything else out here that we need to be aware of. So here on a monthly basis, there's no bottom in sight. You're trading below. There's no bottom in sight on a monthly basis. The weekly and the daily could save us, at least for a while. Why? Because on the weekly chart, you'll see that this week, tomorrow, will complete a TD9 count bottom. It's doing it on the bar following bar number 9. So if you were to take a long position, Thomas, or anybody else out there, and you see price close below this week's low, whatever it is, at the moment, that low is at 2.113. That's going to tell you about a strong momentum move on a weekly time frame chart. It's just going to support what we're seeing on a monthly chart, which is at no bottom in sight. Now, the daily, you're seeing here on the no other bottom other than that Rhodes momentum indicator signal with that key reversal bar. This white background software has not picked up that new profile just yet. So that's why I focused first on that black background chart. We can take a look at some intraday charts out there. We see TD9 count bottom on the 120-minute chart, price above, price making it back to yesterday's high out there. Closing above yesterday's high would be another nice outcome. And so far, that's really acted as resistance. Now, you wanted to take a look at Boyle. So let me do this here. Let me close out this set of charts here since it takes a lot of processing time. And we'll get back to a chart where we can go take a look at Boyle for you. But the comments I'm going to give you on Boyle are really just with regard to areas of support or resistance out here. So let's get Boyle up on our screen. B-O-I-L. Oops. That was pretty screwy. B-O-I-L. And let's get this up on our screen for you. And I'll just try to identify, hopefully it has a new profile that is formed, just like natural gas has. And no, it hasn't. So as we take a look at Boyle, I'm going to just back this up a little bit in order to really look at it on the daily time frame because of the way it trades. So here's what I'll give you on Boyle. Your support level, you're trading below profiles, by the way. The bottom of its profile is at 574. That's your resistance zone. But it really isn't. You've got to pay attention to the natural gas contract. The information that's here on Boyle, it's quite frankly suspect, and it's why I don't use it. So I do hope that helps you out. Again, watch that 2.407 level inside the daily time frame for natural gas. So I do hope that helps you out. Thanks so much for writing in, and appreciate your comments about the show very much. So let's go to our next question. Next question is coming in from Dan inside the Tiger's Den, and Dan wants to take a look at ticker symbol EXAS. So let's get over to that chart. Having a heck of a day. No, I take that back. No, it was CVX. EXA, yeah, it is having a heck of a day, right? EXA, no. Oh, it did have a heck of a party this morning. If we take a look at it, Dan, here's what we can see and take a look at the daily time frame. Everything here makes sense. And that is, when I say it makes sense, it forms a Rhodes momentum indicator top. That pattern is confirmed on February 3rd. What happens? Price moves lower and forms a TD9 count bottom pattern that completed yesterday. The low was on bar number 8. That took place on February 17th, and that was at 60.94. So when you get a bottom pattern, specifically a TD9 count, but I'll say a Rhodes momentum indicator, a Chapman wave bottom signal, a buy the D point, a Gartley pattern, what price should then do, and the only thing that it's entitled to do is go test resistance. Well, in this case here, it tested 2 levels of resistance, Dan. That was a new profile that formed yesterday at 66.10. I know somebody's going to say, hey, Steve-O, this traded well above 66.10. It did, right into the second level of resistance, which is that green oscillator and change line at 67.09. Now, what this tells us, because of that new profile, is that price is likely going to go ahead and test the bottom of that profile. Again, for EXAS, that's a profile that formed yesterday. And the bottom of that profile specifically is at, we're trading below it right now, is at 61.51. Well, we're at 61.55. Now, I've got, I think there must be a little bit of a data flow issue here, and it's delayed just by a tad. 61.41 is where it's printing right now. So volume today on this instrument, and it's pushing lower, pushed higher, and right now it's pushing lower. You've got 2 million shares, and the swing point has 2.2 million shares. Dan, that says really a couple things. If we get a close below the low, which is bar number 8 of that TD9 count, and that's at 60.94, that's going to tell us about a strong momentum move to the downside, and it's going to tell us about an A to B equals CD pattern that is likely to set up, because you're moving, you would be closing below that swing point with volume. Now, we haven't gotten that just yet. It's going to be depending upon today's close. But if that were to happen, here's what that A to B equals CD one-to-one price projection would look like. As soon as I can move this thing. There we go. And so that would then be getting us down really towards the bottom of its profile. I take that back. That was the old profile. Would get us back in towards the 56.46 level out there. So watch that low of that TD9 count. And again, that number out there is 60.94. If that gets exceeded, close below. That's telling us about an A to B equals CD pattern that's going to form for the daily time frame. We can see support here on the weekly, Dan, at 56.59 out there. So hope that helps you out with regard to EXAS. That is Exact Sciences Corp. Stevie used his Exact Sciences data. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the stock chart right now of GSM. GSM is Faro Globe PLC. It is confirming A to B equals CD to the upside today. It's already taken out its B point, which was from the trading session of January 18th. And it's doing it with massive volume. Already 3.8 million shares. That swing point only had 1.4 million shares. Now, the 1-to-1 price projection, as you can see here on our white background charts, the 1-to-1 price projection gets us up to 552. So it's almost hit that as we speak. But see how this is an explosive move off of that C point. You've got a gap to the upside, big volume behind it. Price on the left-hand side of that C to D leg, C to D leg, that suggests more than a 1-to-1 A to B equals CD to the upside. So Dan, I'd be looking at, now it's got to still hit the 552, but more likely 589 to 636 would be the area that GSM is headed to. You need to close above that 552 level. That's also that green oscillator and change on the monthly time frame. So doing that would put this thing set in motion to continue to move higher. So I hope that helps you out. You also wanted to take a look at Etsy out here. Let's move over and take a look at the Etsy charts. ETSY is the ticker symbol. In the case of Etsy, this is trading now below profile. There's certainly an A to B equals C to the downside. It looks like that was confirmed already, perhaps yesterday. Let me just go measure that for you. Whoops. Shoot. Wrong button. Let's put in the A to B leg. Hasn't completed that. I can't visually confirm that, but we're going to confirm it now. So, okay, so Etsy did yesterday confirmed an A to B equal by the D point, a Gartley buy pattern out here. So that remains in effect unless price closes below the 124.36 level. So ideally, now it's struggling, right? It was unable to deal with the bottom of that daily profile, old support that now has become new resistance out here. You've got support also at the 119.45 level, but it's not looking great. But you do have that daily by the D point pattern. So I hope that helps you out. And there was a request to take a look at AMD real quickly. The question is, has that bottom? Oh, there you go. And in the case of AMD, it's got a gap to the upside. That confirms a buy the D point pattern. But price needs to close above 82.20 to get any kind of legs to the upside. Folks, stay tuned. We've got great programming lined up. Don't forget, I'll be recording tomorrow's show between 8 and 9. Please join me early, or at least send me emails, and I'll review the instruments that you are requesting. Have a terrific Thursday, folks.